Hello, I'm Sean Richards of Not a Yes Man's Economics. What I want to talk about today is what is kind of a new form of money, that is Bitcoin. Why? Well, it's back in the news. If we look at this in price terms this morning, and there's various different ways of measuring this, but it's gone above 13,000 US dollars. That, if we look back, compares to 6,000 relatively early-ish in May, around about the 9th. And then we look back to sort of middle to late March when it broke through 4,000. So the price has changed quite a lot. We're back in a bull market phase. In fact, worryingly, if you're a technical analyst or a chartist, whichever way you want to put that, is the pattern here, because it's an old-fashioned, excuse my drawing, ball theory. Any point it sets back or stops accelerating, we could see quite a drop. But nonetheless, this has been quite a move, brings it back into phase, and brings some relief for some. If we look back, those of you might remember somewhere around 18 months ago, or a bit more than that, at the end of 2017, when people were actually borrowing to buy Bitcoin. If there's a definition of a market top, or however you want to put that, then that's pretty much it, that people are so desperate to get in. Sadly for them, of course, because they borrowed and then the price dropped very heavily. If we look behind this to think through why is this happening, then I think we can see several factors at play. For example, until today, we've seen the gold price strong as well. Why is this? Well, I think this is driven by the fact that we're expecting central banks to ease monetary policy again. So, for example, if we look at Europe and the euro area, the consensus now is another cut in interest rates, so they'll go even more negative. A little bit insane, this one, because currently people believe there'll be a 0.1% cut. What will that do? But anyway, should that be so, from -0.4 to -0.5, and more bond buying, or what's called QE. So that's a factor. What else has this caused? Well, we're back to the issue of negative interest rates and yields again. Europe doesn't seem able to get out of negative interest rates, in fact might have more of it, that seems likely. And also negative bond yields are on the march. If we look at Germany, the stereotype for Europe here, the 10-year bond yield is -0.33%. And I do mean that. So if we take this just in simple terms, over 10 years, you'll be paying them 3.3% if you hold their bonds. More of it if you take that on a compound basis. So you're expecting a loss, which is very awkward. And it's these unsettling things that make people worried about fiat currencies, which, let's face it, aren't really actually backed by anything. Central banks do hold some gold, but nothing like enough to get anywhere near the currency about. So that's troubling on the back of that, and people are moving into other assets. So the attack on Bitcoin will be along the lines of, what is it worth? Well, of course, you can play that back on actual currencies right now. Going into negative interest rates, the idea of a war on cash poses a lot of problems. Moving to the next factor is the advent that these sort of altcoins, cryptocurrencies, however you want to describe it, might get backing from more sources that have power in this area. And Facebook isn't what it was, but the fact that it's introduced, or has plans to introduce, a currency called Libra, then gives the whole market a bit more traction, I think. It could bring in a world, for example, whereby you have lower costs for moving money around. This, returning back to the original theme, would terrify central bankers, A, because they want a monopoly on money, and 2, it'll affect what they call the precious, the banking sector, which they'll protect in all regards. So there's quite a bit to think about here. In the very short term, in terms of the price action, I'd be very nervous looking at that. I think it's now a phase definitely not for widows and orphans. But as we look around, it seems, slowly but surely, there's bits of backing for the idea. It might well turn up, though, to be like the event of the railways in the UK. Great success, but a lot of the companies went bang. Thank you.